Inflation is now officially below the Fed's 2% target rate. When will they cut rates? Housing demand continued to increase this week. We had an increase in the number of people applying for mortgages for the 8th straight week. Mortgage rates have climbed about 0.3% over the past 2 weeks, but that hasn't slowed people from applying for mortgages like it did in the past. Housing inventory fell again this week, which is not totally surprising given the time of the year we're in, but all signs are pointing to an increase in demand and for the spring housing market to start early this year. We're covering all this and much more in today's weekly update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part. It is the top 10 ranked charts of both hottest and coolest cities and zip codes in all of Dallas and Collin County. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is January 29th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news. PCE inflation came in below 2% last week, even lower than the Fed's target rate. Inflation is gone. Let's look at the data. Big picture, core inflation rose just 0.2% month to month and is up 2.9% from a year ago. However, as you zoom in, measured over the last 6 months, prices are up just 1.9%, which already beats the Fed's target of 2%. But the even bigger news is that if you zoom into just the last 3 months, it's even better than that at just 1.5%. So 2.9% from a year ago, 1.9% from 6 months ago, 1.5% from 3 months ago. So not only is inflation already below the Fed's target, it shows that it's clearly trending downward. It's so crazy that everything is fine. Inflation is down. Jobless claims are down. Unemployment is down. The stock market is rallying. Basically, all the things the Fed said needed to break in order to bring inflation down, the total opposite happened. Every part of the economy is doing great. Inflation is below the Fed's target, yet the Fed has decided to keep housing completely unaffordable for Americans by keeping rates high. This is the third calendar year of near Great Recession lows in housing demand. No other part of our economy looks like this except the housing market. And the excuse all along has been, well, inflation is high. And finally, they can't use that excuse anymore. The federal funds rate is at 5.25% and headline PCE is at 2.6%. This is extremely and unnecessarily restrictive, and it puts the economy at risk for no reason. And an unintended consequence of this is that this policy is systematically targeting the younger generation, those who don't already have equity built up in a home and are needing to finance their first home. If the growth rate of inflation were at 7 or 8%, then absolutely keep rates high. But inflation is in the 2s, and they haven't cut rates one time. This makes no sense. But on the other hand, it's good to be able to see what your government is doing, because again, there is no longer any excuse for these high rates. They said inflation below 2%, and now we're here, and they've not cut rates one time. The Fed is making a policy decision and choosing to make housing unaffordable while every part of the economy is looking strong and inflation is gone, and this decision is mainly affecting the younger first-time homebuyers. So this data came out last week, and the Fed is meeting this week, so I'm very interested to hear what they have to say about this and see how it will impact rates this week. But if you're one of those younger first-time homebuyers who has no equity, at least you can know we're at the point where they have no more excuses. It should not be long before they start cutting rates. Now, let's move on. We're starting with national news. We start with national housing inventory. This week, we had a decrease of 3,181 homes for sale in the country. We've been talking about this every week, but historically speaking, we should see the bottom for inventory at the end of January, early February. However, since COVID, the bottom of inventory started in March and has only been getting later every year. And last year, it didn't happen until April 14th. So we hope that inventory will bottom for the year soon and get back to more of a normal market of January, February. But this isn't something that you're able to forecast. It's just something you have to wait and see. But one big difference between this year and last year is that last year at this time, it made perfect sense that inventory was dropping like crazy because mortgage rates were dropping like crazy, and they got all the way down to 5.99% at the end of January. So we don't have mortgage rates falling crazy fast like that. And hopefully that's going to help us find our inventory bottom for the year earlier than we did last year. But just know at some point we should get back to normal, and the bottom should be around this time of the year. So could be this year, we won't know for many weeks to come. Now let's look at new listings data. Okay, here's our new listings chart. As you can see, each one of these black dots represents 1 year. So obviously this week to the corresponding week of last year, we had more new listings. However, when you look 2 years ago, we actually had less. That week we were over 48,000. This week we're obviously below that, but we actually had 2,078 more homes listed than this corresponding week last year. Our goal here is that the number of new listings weekly is going to blow the last 2 years out of the water, and as of now, we're just kind of on pace or slightly better than the last 2 years. The hope is that mortgage rates either dropping or stabilizing will bring more sellers back into the market and get some inventory going. Too soon to tell though. Just know, as of now, we're basically right on track with where we've been the last 2 years. The last thing we cover nationally is the number of homes having price decreases every week. Looking at the national chart this week, we're at about 31% of homes having price decreases, down from 34% this time last year. This was the biggest leading indicator nobody was talking about last year, that home prices were not going to drop. If you're going to have a price crash, you would see it starting by an increase in the number of homes having price cuts every week, not a decrease like we had all of last year and continuing into this year. And we'll look at all of these numbers in our local markets here in a minute. But as of now, looking at this chart, the number of homes having price decreases will probably shoot past last year's bottom, which was around here. And again, unless this number starts to increase, that means prices are not going to be coming down. Okay, moving on to mortgage rates. We started off last week at a 6.87. We got as high as a 6.95 and ended at a 6.9. This is the kind of boring, stable rates that we want to see this year. Stability brings confidence to both buyers and sellers that they will be able to make an informed decision. When rates were swinging wildly every week, it was impossible to make any kind of informed decision because you didn't know where rates were going to be in a week or what your mortgage payment was going to be in a week. So boring mortgage rates, that's what we want for the year. Obviously, we'd like to see them trending down slowly, but at least less movement is good for now. Now let's look at the 10-year. So obviously last week we talked about it. We got almost to my prediction range high, which is about a 4.25. We got rejected and we've just kind of been consolidating over this line. If I was a betting man, just based on the inflation numbers that came out, I would think that this week the Fed is going to say something dovish that's going to bring us back below this line. And again, these two black lines from about here to here, which corresponds with 6 to 7% rates, I think that's where we're going to spend most of the year. But just remember, as I talked about in last week's video, if the spreads get better, then instead of 6 to 7% rates, even with staying in this range could mean like 5 to 6% rates. But as far as the 10-year, this is my prediction range for the year, is these two black lines. Now regarding mortgage purchase applications, this week we saw another 8% increase in the number of people applying for mortgages. But what's even more encouraging is, for the weeks we've been tracking, this would make 8 straight weeks of positive growth. Okay, before we move on to the local markets, two things. One, I'm now doing a weekly home buying webinar. This is for anyone who is considering buying a home in 2024. This will tell you everything you need to know. So if that's you, click the link in the description below. And number two is, if you're someone who's considering investing in new construction in the DFW market, I made a video last week that is a must watch for you, and I'll link it right here. But investors are buying up new construction, even with a negative cash flow. And I walk you through exactly why, so you can decide if possibly investing in a negative cash flow asset here in a prime market like Dallas might make sense for you. Okay, now let's move on to the local markets. Let's start with the MLS data, starting with Dallas County. We had 316 new listings in the last 7 days. That's 73 less than last week. 194 closings. That's 34 less than last week. 251 went under contract. That's 29 less than last week. Of the homes that closed, 31 were immediate sales, meaning they contracted within the first week. That's 5 less than the previous week. In total, there are 1,564 homes either under contract or in pending status. That's 213 less than the previous week. Looking at Collin County, we had 209 new listings. That's 102 less than last week. 181 closed sales. That's 27 more than last week. 182 went under contract. That's 26 more than last week. Of the homes that sold, 34 were immediate sales. That's 2 more than last week. In total, there are 1,418 homes either under contract or in pending status. That's 32 less than last week. Okay, moving on to housing data. Let's start with Dallas County as a whole. And if you see my videos, you know that I use what's called the Market Action Index. It takes all of this data, puts it into one easy to read graphic with a number. Right now, we're at a 42 here in Dallas County. We've been around here for a long time, since really November. We've just kind of fluctuated around this number. But on this chart, a 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in? But all we're seeing in this data every week is pretty much that we're at the bottom, which is normal for this time of year. We would expect that in February, things are going to start heating up. So Median list price has been stuck for a while around 400,000. Median days on market as well, stuck at 56. Price decreases stuck around 36. The number of homes having price increases is climbing. Probably this is all new construction. We're going to cover that here in a minute in Collin County. Inventory has been stuck for the last few weeks. The market action index again has just been fluctuating around this 42 number. But if we look down here historically at the market action index, basically each one of these dots represents 1 year apart. So if you just look where we are and look at the rest of this chart, it does look like what's going to happen next is things are going to heat up. So it looks like we should be about at the bottom of the market right now, which means if you're looking to buy a home, this is the time where things are the coolest, where you'll have the best opportunity to get the best deal. Other than that, for the rest of the year, you're going to be competing with more buyers, prices are going to be going up, and there's going to be less options. So nothing really new and exciting, just exactly what you'd expect. Let's move on to Collin County. Collin County, in my opinion, has been telling a different story, and I've been talking about it every week. Collin County is a strong seller's market at a 45. Collin County is very different from Dallas County in that there's a lot of new construction. So the data that we see is a little bit less accurate because there are homes that are getting contracted and being built that we can't see. But you know who can see that data is the actual builders, and they're going to make decisions based off that data, which my biggest thing is we've been seeing every week the number of homes having price increases has been climbing. We're all the way up to 5.58% of homes for sale in Collin County are having price increases. So that tells me that these are the builders. That tells me they can see the number of people coming in every week is increasing. The number of people getting approved with their lenders every week is increasing. The number of homes they're contracting that aren't listed, people building on these lots, is increasing. Whatever they're seeing that we can't see yet is causing them to believe it's time to raise prices. So we have median list price is holding firm. We're having a $50,000 increase in the median price of new listings since January 12th. Median days on market has also been dropping over there. They're down to 35. And I'll say this inventory number looks to be going up, but I don't buy it because there are so many new build communities that I've been calling on specific homes. I'll have a buyer that this home is good for them, I'll call on it and they'll be like, oh no, that one went under contract a week ago, but it's still listed as active. And this has happened with almost all the builders that I've called. So it's my opinion that because they have such low inventory, these houses are going under contract and they're leaving them looking as active so that people will call the communities. Otherwise, they wouldn't have inventory to list. So no one would know that they had inventory, no one would be calling or coming to their communities. So I believe the volume is going so fast in Collin County that they're leaving up homes that are already under contract on purpose to appear active just so that people will still come. And I think all of this data we're looking at suggests the same. I think things are moving quicker than we know, and I don't think we're going to realize it until later, at least with new construction in Collin County. So if you're looking for new construction in Collin County, please do not wait. The market action index is already at a 45. It's already a strong seller's market. And from here on through the rest of the year, we can expect it to get higher. And you got to remember, we're coming out of 8% mortgage rates. So rates are going to be below 7% most of the year. They could even get below 6%. And this number is going to be significantly higher. And I'm telling you, it's my belief that builders are already seeing their supply is getting eaten up fast enough to where they're having a lot of price increases. Now we're moving on to my favorite part of the video. This is the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. And this is ranked using that same market action index number we just talked about. Remember, a 30 or below would be a buyer's market. So starting with the absolute hottest cities, Coppell remains in the #1 spot and it is nearly a 59. That is way hotter. Remember, 30 is a buyer's market. This is almost a 60. Plano heats up 2 spots. I believe this is the highest Plano's ever been on the list since I've been tracking. Carrollton cools off 1 spot. Louisville cools off 1. Richardson heats up 1. Saxe heats up 4 spots. Grapevine cools off 2. Duncanville cools off 1. Allen remains, and Prosper cools off 2 spots. Then we like to zoom in on specific zip codes. The absolute hottest zip code is Plano, Texas 75023, followed by Carrollton 75010, Coppell 75019, Louisville 75077, Frisco 75035, Irving 75063, Garland 75042, Plano 75025, Carrollton 75006, and Plano 75024. So these are the absolute hottest cities and zip codes in all of Dallas and Collin counties. Now we're moving on the exact same thing, but the coolest markets, if you might be looking for a deal. Starting with the coolest cities, Van Alstyne and Leonard remain in their spots, and they're both the only buyers markets in Dallas and Collin County right now. That is below a 30. White Wright remains at #3, and it's almost a buyer's market. Balch Springs cooled off 3 this week. Nevada cools off 1. Seagoville heats up 1. Ferris heats up 3. Farmersville, Rockwall, and Red Oak all remain in their 3 spots. Zooming into zip codes, the absolute coolest is Van Alstyne 75495, Leonard 75452, Dallas 75203, White Wright 75491, Balch Springs 75180, Dallas 75204, Dallas 75212, Nevada 75173, Seagoville 75159, and Ferris 75125. Remember, if you're looking to buy or sell in the Dallas area, call, text, or shoot me an email. I'd love to connect. That's it for this week. Thank you for watching, and I'll see you in the next video.